Welcome to MGAA Conversations, our new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Hello, I'm Mike Keating and welcome to the latest MGAA Conversations podcast episode. Today I'm absolutely delighted to welcome Rinku Patel, CEO at Pinewalk Capital, a leading MGA platform provider. Rinku, good afternoon.
Hey Mike, how you doing?
Fantastic. Great to have you on board, and I'm sure our listeners are very excited about listening and understanding around Pinewalk Capital. So let's get straight to it. As I touched on, many of our listeners will be interested and keen to understand Pinewalk's MGA platform strategy and in particular its relationship with Fidelis. Can you just take us through a bit of a brief history so our listeners can get up to speed?
Yeah, absolutely. I think as people have tried to unravel it, it's not the most straightforward structure. I think you and I have talked about it before as well. So I'll kind of give you an overview. Then if there's anything I've left out or you want to dive into, just ask the question. So as you know, and kind of as listeners will know, kind of between Fidelis and Pinewalk, it's kind of become that underwriting destination of choice. You know, we've got a number of lead underwriters, but the best example of that is Clive Washbourne on the Navium MGA. You know, what we try and do is provide that kind of independence of underwriting, that, you know, bureaucracy light, you know, away from that kind of regulatory responsibility you have as you become a senior underwriter. You know, what happens with a lot of people is you might be great at your job and then all these other responsibilities start attaching to you as you progress through a company. What we've done is find the sweet spot with kind of underwriting freedom, you know, minimum or kind of the most appropriate level of regulatory oversight and compliance management around the underwriters. And that's ultimately what we've given to Clive and the other MGAs, which is that ability to underwrite with the most appropriate kind of compliance and regulatory oversight. I think what happens is everyone tries to kind of just follow the same rule book for everyone, whereas actually every business is different, every line of business is different. You know, and that's where we've got to. I think what we have is that plug and play model. We have a kind of a pretty unique semi-permanent capacity kind of contract with the Fidelis Insurance Group. We've just put Lloyd's into play. Our execution risk for new underwriters is now minimal. So if we want to work with a new underwriter, you know, they know on day one we've got capacity for that line of business.
Right.
You know, you're not spending 6 months trying to find capacity for kind of the MGA we've all agreed to sign up to because we all think it's a great deal. And, you know, just on the Fidelis and Pinewalk interaction, I think, you know, everyone will know Fidelis kicked off back in 2015 as the original insurance group. Pinewalk joined, you know, founded in 2017. We did kind of one MGA in our first year, which was Radius. And since then, we've built out kind of to a significant number. We've kind of got 12 live today, 13 kind of just signed, which kicks off at the end of the year, which is the A&H one. You know, it's been a significant kind of growth path for us. The acceleration in Pinewalk is gaining pace. I think, you know, as I say, kind of with 13, we had 8 at the end of 2023. We've added, in effect, 4 during the last 12 months. In 2025, we're all, you know, we can't talk about kind of what we've already got going on, but there's a number there. So I think that ability to have capital, the speed of execution we have, the way we wrap our services around the MGA, the underwriter, you know, it just gives a level of confidence to everyone involved in the deal, in the structure, and you know, as the underwriters can attest to, I mean, we go at lightning pace. If we come across an opportunity, if an underwriter's talking to us, the setup and go to market is it's just breakneck speed. I think we had Clive. I think my first conversation with Clive to him being in the office was somewhere around 7 to 8 weeks. and he was
Right.
underwriting on that first day he was in the office, which quite memorable. It was the 4th of May
Yeah.
back in 2021. So, that's really important for us in terms of that ability to provide that level of confidence that we will get off the ground. And I think, as you've seen, when we're announcing a new MGA or we have one signed up, they're normally off to the races pretty quickly. They have everything lined up, ready to go on the first day they arrive, and that's the whole partnership working together. That's the team at Fidelis Partnership. That's the Palm Walk team. That's the underwriter. Um, you know, it's how we work. It's an amazing kind of situation.
So in a way, just replaying that, what you're really focusing on and be able to provide that real sort of forensic focus for MGA, the underwriters, is that come in, do the underwriting, do what you're good at. And you've touched on in terms of your proportionate around regulation. I'm aware that you have cutting edge back office capabilities which you provide to your MGA partners. Can you just, I've seen these and they're very impressive. Can you just expand on some of those capabilities which again
Sure.
empower your MGAs, which you've touched upon, to do what they do best? I suppose
Yeah.
that would be my phrase.
Sure. I think the way to think about it is, it's a range of internally built tools and externally resourced tools. So we have stuff we've built in-house. We have apps like FireAnt, but then we have lots of our own internal apps, which the guys love naming them, and because they're bespoke, they're built around the relevant MGA, relevant individuals. I think the slight USP we have when we're building technology internally is that we take things which are available off the shelf, and then we just know how to execute them brilliantly. It's like anything. You can have a really good piece of kit. It could be your phone, it could be a laptop, it could be a car. But if you don't know how to drive it, use the laptop or use your phone to the maximum extent, you're not going to get much out of it.
Yeah.
What we've kind of developed a knack of doing is working out how to deliver an experience where the underwriters will genuinely turn around and say, "This is amazing. Why didn't we have this at our last shop?" Where compared to some of the places that the guys have come from, we're much smaller. If you take Pine Walk Technology, kind of where we've come from, we're much smaller. All these other kind of underwriting houses have much, much bigger IT budgets.
Yeah.
But the big difference for us is that we're much closer to the underwriter. We listen very closely in terms of what the requirement is. We implement pretty much everything on a bespoke basis. One of the things I always say is, look, I'm going to give you a whole bunch of blank sheets of paper. Why don't you just scribble out what you want, and we'll figure it out with you. And
Yeah.
we tend to do that. So whether it's dashboards, the workflows, they have that by the time they've joined. And then when they're asking for a change, one of the big things we do is kind of work out a way to deliver it. I don't know what your experience of IT kind of delivery is, but
Not great to be fair.
well, I mean, just logging onto the podcast a while earlier was quite entertaining too. But you can imagine, the old joke about computer says no came from somewhere,
Yeah.
right? And it was exactly that. Where we are, the team, the way we all operate is very straightforward, which is we will figure out a way to do it. And our goal within the team is, look, we'll try and actually deliver most things within 24 hours, and then it'll be the bigger things we can't do over a pace of time. So if an underwriter has a new idea, a new piece of data needs to be captured, whatever it is, most of that stuff you can actually do pretty quickly in a controlled way within 24 hours. We flex around the teams. We know what our roles are. Underwriters underwrite, Pine Walk team does the rest of it. That's our focus. So we make sure the underwriters have the toolkit available to kind of deliver kind of the promise to the carriers, right? Which
Yeah.
is underwriting quality, the data points required, border management, all of that stuff. And it's all delivered through the technology. We try and make sure as much as possible is done through the systems and our processes. And one of, and I can't say who it is, but one of the MGAs that we've developed such a nice piece of kit that a couple of carriers have actually asked to buy it. So, and if you think of the way we deliver and develop things. That's a really big tick for us in what we've developed, but also the way we work with the underwriters.
Yeah.
It's what they've wanted, it's exactly how they underwrite the business. There isn't another 50 buttons on the screen which you have to avoid, right? It's very, very clear what you're meant to work with. So there's minimum distraction on the page and you just get on with your job. And that's our key focus, right? We want to deliver tech that lets you get on with your job.
And is there a foundation of that tech, Rinku? Is there, because obviously you referenced about being bespoke for individual MGAs, but do you have a sort of a foundation where some of that is reusable, say like in the data piece where, you talk about data points, most MGAs will have consistency around certain data points anyway. So you get the sort of economies of scale in terms of some of that tech.
We've got a core, and the core you can imagine is built around the bordereaux and the datas we have to deliver to the carrier base. So if you think the Lloyd's standard bordereau, we've developed our own carrier standard bordereau, and then we've developed our own additional data points. We see those as standard, as a kind of minimum requirement. Those are
Yeah.
core to kind of everyone. But then if you think we've got various marine classes through to product recall, through to reinsurance, through to credit, doesn't matter who it is, and more recently casualty, they will have their own small nuances, and we just tag those on at the end. So 80% is, you could argue, 80% of the data collection's out of the box, but then there will be nuances around different lines of business, and also what the underwriter needs and wants based on their history and their understanding, which is based around the way they work on a day-to-day basis. So yeah, there is a core, but as much as everyone, not every, well, nobody's the same.
Yeah, but that and again, my memory you demonstrate to me, but that real time sort of dashboard capability, it really enriches the underwriters to make decisions if some elements of the portfolio may be going slightly off, other opportunities where money may be being left on the table. So it's that innovative ability to sort of react so quickly, which actually gives that competitive advantage, doesn't it? As opposed to waiting for the old-fashioned bordereau 3 months later, and then all of a sudden you've got a problem, and you're now trying to address any actions.
Yeah, so an example of a kind of an odd bit of data, as an example, is tracking the underwriting or the slips brought in by brokers who wear red color ties. Right?
Right.
Genuinely, if one of the underwriters turned around and said, "Look, I want this bit of data because I think there's an issue here, and I want to track the underwriting and the outcomes and kind of what it looks like, so we could track the colours of the ties that the brokers are wearing." Right? It's not standard insurance data, but we can collect it, and we can collect it, and we can report on it. And actually, if you were to tell me right now that's what you wanted to collect within an hour, you'd have that on my system.
Okay, so it's cutting edge, as I've said. Okay, I want to pivot a bit more sort of broader now, if I may. So, we know the specialty market continues to grow. It attracts new capital. There are more MGA startups now than there are actually startup brokers. Uh, when you look at the market dynamics, what do you think the sector needs to do to ensure it maintains that momentum?
Yeah, I think a really important thing is not to do slapdash deals.
Okay.
All right. Um, you know, MGAs will continue to grow. We'll keep having MGA startups and MGA growth if we prove out the model, which means proving out the results, which means doing kind of the best possible for the kind of the stakeholder base, and that is everyone involved, right? So it has to work for the underwriters, has to work for the carriers, has to work for the reinsurers, has to also work for the brokers. If it doesn't work, and let's say service levels drop off, or the results drop off, or the kind of earnings aren't there for the relevant underwriters, clearly, if it doesn't work for everyone, at some point that breaks. So I think, you know, that care over the deals you do and the startups is extremely important. I think we have a, a tried and tested approach. We go through a number of rounds of reviews. We go through so much in such a short space of time. But by the time we're kind of signing up with a new line of business or a new underwriter, we've done our homework. We are as sure as you can ever be. Doing a startup. You've got an interesting mix here. MGAs are not necessarily or haven't historically been a path to growth, but they are now. But then
Yeah.
you've overlay the fact that most startups don't generally work, right? And we're in an interesting environment now where we've got MGAs and startups, and they all seem to be working. So, there's definitely a formula there, and I think we need to make sure that we don't actually veer away from making sure we're looking at the long-term outcomes for everyone involved. So I think, more successful startups or more successful MGAs over the long term will hopefully lead to more MGAs and that continuing cycle.
So you said, just give a bit of insight
Yeah.
in terms of the MGAs, the new ones. Do you find that you're probably more patient in terms of delivery of the business plan than
Yeah.
maybe the MGA? That your counsel is, let's not rush it, let's get it right.
Yeah.
We've done the due diligence, we know it's going to get there. So
Yeah.
yeah, okay,
I've said it a number of times, which is we don't chase EBITDA. So, we're an underwriting house, right? That was the inception of Fidelis Partnership. That's where it's come from. Richard Brindle's an underwriter with a stellar track record, and then we're plugged into that. We can't veer away from that mantra. So our ultimate aim has to be delivery of underwriting profitability to the carrier base. If we do that, we'll be successful. If we have kind of points where we give in to just growing for the sake of growth, that's not the way to do it. Right? That's when there's additional risk, which isn't really part of our business model.
yeah, okay, that's a great insight. Very interesting. So looking at Pine Walk again, MGA platform of this significant size internationally. You have a base sort of established in Ireland, which we've talked about. Do you have a view about what territories you feel are offering more growth? Are there other territories, or are you being opportunistic in terms of, both globally?
Yeah, I think we have to be opportunistic. I think you can look at certain territories, but we have always said we're opportunistic because you never know when the right deal comes along. We are very, very picky about what we look for, but I think you know on the same basis we don't apply unnecessary boundaries. So we've looked at deals historically across the US, Australasia, Europe, but they just didn't feel right or didn't work for us. So we look at as much as we can, and then we pick through them. I think what we could be and what we are looking at, and this is across Fidelis, is bricks our kind of bricks plus strategy. I think there's a significant amount of growth kind of from those territories. I think we have to be open to kind of those territories, and I think where we are, and within kind of Fidelis Group, obviously we've got a new office out in Abu Dhabi, so we're looking towards the Middle East and
Yeah,
Africa. That's a natural kind of stepping stone for us. We have an office out there, so clearly we've got an avenue to look at kind of new opportunities there. But I think ultimately, as you kind of we've said, it's opportunistic. It's the right underwriter, the right business plan, right territory, right line of business. Everything has to work, and everything has to kind of add up for us to kind of take the risk of setting up another MGA. Whilst our growth looks amazing over the last few years, the prospects look great. You would be surprised how many business plans we see before we do a deal. Right? I mean, we've seen so many to get to kind of the 13 odd MGAs that most people think I mean, it's unbelievable, to be fair. I mean, we see a number every week.
and can I ask you, just again, coming back to territories, is it important about how sophisticated the MGA model is in that territory, or will you just look at the deal alone? Because if you look at Europe in particular,
Sure.
there's some areas in Europe which is still pretty unsophisticated, as I'm sure you'd agree. So is that also a sort of very much part of your due diligence around creating an MGA in an unsophisticated MGA territory,
Yeah,
or do you feel actually no, we can make this work even though the territory itself may be immature in terms of the MGA model?
I think you coming back to it, which is you look at each individual opportunity on its own merits, right? So that will be country, local regulation, it will be the line of business, it will be the underwriter, the underwriter's experience, underwriter's track record. Um, you know, going back to kind of my time at one of my previous shops, we operated all the way, around the globe, and we had a lot of European MGAs, and you know, we actually were the first to set up an MGA and have it recorded as an actual business model in Spain. As an example, we actually went to kind of a legal process to actually define it. So, um, not afraid of that. Been there, done that before. I think the critical thing is to make sure it works as a business. The territories which may seem let's call it less MGA friendly or not so au fait with MGAs, it's only a matter of time.
Yeah,
And
yeah.
we just have to pick the right time to go into the territory. And you look at Europe, it's on the way. I mean,
Yeah, yeah, it is.
you can see it, you can see it happening. It's just going to operate at a different pace because the markets may be a bit different.
Well, we all seem, if not just the London, we all seem to be heading out to Amsterdam in June for the European
I'll see you there.
inaugural. Yeah, I see. Yeah, I know, that's exactly. Yeah, so it looks like the whole of the London market is basically exiting to Amsterdam for a couple of
Well, it's
days
the
by the
first,
looks of it.
just it's the first European MGA conference out
Correct.
there.
Yeah, yeah,
We don't know what it's going to look like, so it will be interesting to just gather. There's a number of people I know from Europe who are going to be there,
yeah.
so it'll be interesting to see kind of what opportunities do arise or don't arise. But
No, agreed.
hopefully it's the first of kind of a continuing kind of annual cycle.
No, no, and we've got a vested interest as a UK and Ireland association to
Yeah,
see what potentially we can do. So yeah, we'll look forward to seeing you there. So I always ask my guests to give a view on the regulatory landscape. So there's no avoiding that. So we had a very healthy session members with Matt Brewers a few weeks ago where he talked about proportionality and provided some excellent challenges to us as an association around are there areas which are frustrating our members, then come and talk to him. But I'd be just interested in your view, probably more around the UK side. That if you had a wish list, is there anything specific you would like to see the regulator do to ease some of the sort of regulatory burden, and let's not dilute the cost of that
sure.
regulatory burden, which has to be paid for somewhere along the line.
Yeah, look, I think it's worth saying my interactions from a regulatory perspective have always been pretty positive. If you think about the setup of the Pine Walk model, the bifurcation with
Yeah,
Fidelis, those weren't straightforward things, right? So we did Pine Walk as a startup. Fidelis as a bifurcation was a very unique process at the time, right? So I think if you're able to work with the regulator works with you. And
yeah,
we've been kind of, I have to say, they've been great, listening and kind of understanding what we're doing, and the way we've worked with them has been super positive. I think as we go forward, I think there has to be a better understanding of MGAs with the regulator. I think, that part that we play in the value chain, um, I would say, is there a true understanding there? I think, where obviously, through the MGAA and other associations, there's kind of a better understanding that's being developed. But you could say 5, 6, 7 years ago, it wasn't as good. So I think that has to continue happening, especially as it's kind of one of the key growth engines in the market at the moment.
yeah, yeah,
So, there is that part there. And also then it's not just MGAs, it's MGA incubators, um, which have also got to be kind of better understood. The AR regime, which helps the incubators. I think that's really important to understand. And then, coming back to proportionality, the reason why we can be successful setting up the MGAs we have has been the way we've operated. And I think the way we are, I mean, I say we're kind of appropriate. I think we kind of are doing more than we probably could. but we do that because we think it's the right thing to do. So with the regulator, I think that an open dialogue in terms of what's appropriate and what we should do, shouldn't do, because there's always that slight kind of overlap with brokers, and we just need to draw a line so it's much clearer.
Yeah.
And then obviously there's a bit of an overlap on the carrier side as well. So
Yeah.
we have this overlap with capacity and broking that we just need to manage quite carefully to make sure we're not caught out by anything that really should be sat on one or the other side.
Yeah. No, and I think that's very insightful, and that actually was exactly what Matt was saying. That if there is a duplication of sort of producing data,
Yeah,
then he was very open to say, come and talk to us about it, providing we get it from somewhere and we're allowed to monitor
exactly.
customer outcomes and everything else. Then why would they want to be adding cost into the business, certainly when they've got their secondary sort of competitive objective as well? So that's something we'll be leading on from a MGA on the member side.
Yeah, sorry, just on that, if we can manage the cost, so let's say if there's additional data being captured, or we're capturing the same piece of data, which there is a risk we could be capturing it 3 to 4 times.
Yeah.
If we can take that out, the great thing is it frees up time, effort, money to invest in growth, right? Which is ultimately what kind of the strategy should be for everyone in the market and for the regulator as well, right? The more growth means kind of more going into the regulator as well, all at the same time. So everyone wins.
No, agree. I want to touch on Lloyd's now, if I may, and you've referenced Lloyd's earlier on in our conversation. So, and I want to just get your view around its current attractiveness or otherwise as a capital market. Obviously, 2024 was produced excellent results, but there was commentary that there was a little movement in the expense ratio. So that's a different debate. But when you look across capital providers, obviously you've got
Sure.
the Fidelis. Where would you place Lloyd's outside of the licensing piece? Where would you place them in terms of that level of attractiveness against some of, and a lot of our sort of insurer members, against actually some of those insurer members, and maybe some of the new kids on the block,
Sure.
Rinku, such as Bridgehaven and those other type models. What's your sense?
I mean, I might sound like a broken record. You kind of have to look at it all individually, depending on what's going on at the time. I think Lloyd's, you mentioned it. It's the licensing, it's the recognition that it has globally. You start off with a new carrier, you could be operating internationally, and the people will be asking, "Who is this?" But Lloyd's is renowned. Everyone knows Lloyd's. Everyone knows the licensing. It's pretty much every single territory you can think of will recognise Lloyd's. So, you know, even beyond the license, it's just that brand visibility. So you get that from a lot of the larger carriers, but Lloyd's, you're pretty much there and guaranteed. So I think that makes it different. I think that brings its own value. I think your point on 2024 is kind of an interesting one in terms of cost base, and clearly, I mean, they've said it themselves. There's work to do,
Yeah.
and actually, if that gets there, that means it could free up more opportunities in terms of growth, because they're able to do kind of different deals, different structures with what is a very kind of fast-growing MGA space. So, I think for us, as a key part of our capacity, with us and Lloyd's, we've had a great start.
Yeah.
If I look at Pine Walk and TFP as a whole, I mean, bearing in mind how quickly we launched, so we've seen a bit of a change in terms of how quickly Lloyd's will get stuff done. I think then we've seen just how well we've done during our first kind of period with Lloyd's, and then looking at our forecast going forward. I think for us, key partner will be going forward, and we'll be kind of throwing loads of new ideas at them. I mean, that's what we want them for, and hopefully they can give us the opportunity to do more outside of what we've already got. I mean, they're across all the MGAs already, which is
Yeah.
great for us.
Yeah.
But yeah, ultimately, you take, if you think about it, it's the brand, it's the credit rating, it's the licensing, it's the efficiency. It makes it just efficient. So, it makes that all attractive. So I think that's where I would look to kind of Lloyd's.
Okay, that's interesting, very interesting point. So there's some mood music which says the expense ratio can be a little bit prohibitive when compared to
Yeah,
some of the others in terms of what loss ratio you can write at with that sort of cost. But
yeah,
that's the same in any financial model.
yeah.
So,
And
but
look,
encouraging.
we've seen it on a number of opportunities we've looked at where
Yeah,
we see them as probably Lloyd's specific,
yeah,
and we are probably prohibited from doing that just because of what Lloyd's requirements are. So if Lloyd's are able to, improve loss ratio, improve the kind of expense ratio, make the loss ratio more kind of acceptable, then there are deals which are currently outside of Lloyd's, which Lloyd's could be doing. And we've seen, I don't know how many startups I've now been involved in, a hell of a lot. Pine Walk plus previous. You know, we could have easily done a couple more. And they would have been into Lloyd's, and Lloyd's would have had more premium, and I'm pretty sure they would have been highly profitable. Except, you have these little things which are little hiccups getting those over the line.
yeah, that's fair. It's encouraging from Lloyd's. It's good to hear it from you.
Yeah,
So, just as we draw to a close a little bit, so you touched on liability, MGA, which is one of your more sort of recent ones. So, when you look at all these opportunities, is there any particular segment which you're anxious to sign up to, or again you're just being opportunistic and you haven't got a sort of a wish list of any particular segment, stroke product niches that you really would like to sort of get off the ground?
I think, yeah, not anxious. I wouldn't use the word
No,
anxious.
no, no. So, yeah, yeah, not anxious. Yeah,
Not necessarily.
exciting,
Yeah, yeah,
exciting.
yeah. Not necessarily anxious, but there are markets which actually we have literally just got into, which we were looking at from the outside, thinking, well, those are big spaces. We're not in there yet. There's got to be a way where we can structure something that works. But then obviously we come at it from a very particular kind of approach, which is it has to work for everyone in the chain. We look at it from, the deals are very long term. My background in finance means I look at everything over kind of a 10, 15-year model. If it doesn't work for me, I'm probably not going to entertain the conversation. So, there's a reason why we've only just done a casualty kind of sell, right? We're about to kick off in A&H at the back end of this year. So, we're always looking. I would say pretty much no line of business is out of scope. It's whether it works, bearing in mind kind of the capital requirements, the underwriter, that longevity. I don't really want to have an MGA kickoff, which you know ultimately is a 5-year wonder. That's not really in the plan for us. We look at all of our opportunities and think, do you know what? We want these things to be going for 20, 25 years. So when we start them up, we're looking at it with a solid underwriter. That underwriter is probably going to go for 10, 15 years. We're going to put succession around them. We want the carriers, the reinsurers to be really comfortable that we know what we're doing, that, we've got a proper plan in place, that, it is our reputation on the line
Yeah,
here.
yeah,
We set
yeah,
something up and it doesn't work, doesn't look good for us, and then that makes it harder to do the next one. So, that track record of attracting the top underwriters with the top kind of product we have as Pine Walk and TFP is really important. We don't want to tarnish that with something that doesn't work. So nothing's out of bounds.
yeah. So,
Um,
so no anxiety at all then. At all.
no, never.
Absolutely, absolutely. That's fantastic. Okay, so look, my final question. So I've no doubt I'd like to have another chat with you in 12 months' time. So if we were having this conversation in May or April, late April, early May in 2026, what would you like or hope to like to share with me in terms of, what Pine Capital and TFP have achieved?
Um, a lot, probably more than a 45-minute, 1 hour podcast will probably deliver. I think, if you take a look at just what we've done since 2015, the number of different MGAs, the kind of what kind of Fidelis have done, you think bifurcation, setup, territories, it's just non-stop. So I think the challenge for us is that we strive for so much that it's difficult to know kind of what we'll achieve in a year, because we set these goals and then we always end up doing much more than we originally planned. So I think, but for us, I think very simply, look, in a year's time, we will have surpassed $1 billion. I'd be massively disappointed if we haven't done that. And, that I want to, hope we get there. Obviously, market conditions will play into that a little bit, but, that would set us at an interesting place where we would be one of the fastest growing incubators ever in London.
Yeah.
So that's another goal and achievement I think would be nice for us to kind of have. Clearly, A&H will have gone live and been successful. We will have had 1 year of casualty, so we can come back to how that's gone back then, considering that's not a usual class we would have kind of expected within kind of the Fidelis kind of world. So that's really important for us. Obviously, additional capacity. I mean, we're growing at the right pace. We have a great portfolio of MGAs. We have a great portfolio of lines of business across Fidelis. So having kind of additional capacity on board, expanding on Lloyd's. Coming back to technology, I'd like to think we would have our first AI initiative in place.
Okay.
We're working on a number, but as some people have found, with technology, just like the lights in this room, what we're kind of seeing with that is that there's a lot of AI startups, and so a lot of people who say they can do certain things, and actually, when you get under the covers of these businesses, they're not actually doing that. If you remember the old insurtech boom, it's not that different. So you have to kind of pick and choose your way through these things. So have our first one up and running would be great. I think bricks for us is a very clear strategy. So more growth in kind of the bricks kind of regions would be critical.
Well, anyway, a busy 12 months.
Yeah, it'll be busy. It'll be very, very busy as usual, right?
Okay, absolutely. Rinku, look, absolutely fantastic to talk to you. Thanks for giving myself and the listeners of thoughts, sharing some insights into Pinewalk Capital, and I'm sure the podcast will be very popular once we get it released. So again, thank you very much for your time. All the best.
Great, Mike. Thanks for having me. Great to speak to you. Thanks.
Cheers.
Bye.
Bye. Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.